Hello everybody, thank you for tuning into this video. It's Eden over here. um, a very informative video today. I'll be talking about boom and crash. Okay, this is something that has been long overdue because there's a lot of people that's interested in this particular market, especially like if you look at the youth in South Africa now. It's all over social media and so forth. So yeah, we have been doing this for a while before this whole boom and everybody started doing it. So we're grateful that we're able to have had that head start and stuff like that, because uh, forex just for me didn't make sense at the time. This made more sense, but that's just how things work out. So yeah, thanks once again for watching this video. We're talking about boom and crash today, what it's all about. I'll be dropping some knowledge on what I've actually experienced and learned over the few years that I've been trading these instruments. So yeah, like I said, it's very informative, guys. Not to waste too much of your time. I'm just gonna jump straight into what's happening. Okay, so yeah, we have a chart open at the moment. This is boom 1000. This is one of the instruments. Okay, so how it simply works is there's 6 instruments. There's 3 instruments that we only trade to the upside, and there's 3 instruments that we only trade going to the downside. Okay, that's how we simply trade. That's how the strategy works. So always remember that when it's boom, we always trade strategy, or our strategy consists of analyzing and expecting like a movement to the upside. Okay, and then if we're trading the crash instrument, we're always expecting movements to the downside. Okay, I'll explain it nicely. So just to break it down a bit further for you guys, how it works is, as you can see, we have a chart open now. This is boom 1000. This is what's this instrument's called boom 1000. This is one of the 6. Okay, so it's very simple. As you can see, there's a lot of small red dotted bars going to the downside, and then you also get these long spikes, these blue ones, to the upside. So how it works is, our strategy, like I said, consists of catching the movement to the outside when it consists of boom, simply because these movements to the upside, they can occur in a blink of an eye. Okay, if you can back test, or if you have experience in analyzing or trading these instruments, you'd realize that they happen in a blink of an eye. So it's always better to go where the spikes, anticipate the spike actually happening. Because another reason I would say that also is because if you're a new trader, for an example, if you find $50 and you see an opportunity going to the downside, and it's very obvious that it will move down, and you trade in this instrument, for an example, and it goes against you and a spike occurs, you can blow your whole account with one simple trade, you see. So it's always better to give yourself more chances to be able to trade, so that you can gain confidence and have a strategy that you can be confident in as well. So yeah, it's very simple, guys. We use a lot of forex terminology, and the way we approach the market could be the same. Okay, a very easy way of trading it is like knowing that since the market can repeat itself, you look for those moments where the price gets to a certain point, and then a spike happens like it happened before. So when we talk about price, as you can see on the right side of the screen here, there's like a moving numbers actually. So that's what we call price. So if you go onto the app, or if you're using your computer and you click sell, for an example, and you say, okay, I'm gonna say the market's gonna go up at this point. Okay, so this is the price you enter the market in, right over here. Okay, you enter the price here. So if the market continues to go down and you said it's gonna go up, you lose money. It's that simple. So if you say it's going to go up, and you click and you enter here, and you say, okay, this is where I say it's gonna go up, and it actually does, then you make money. So it's that simple. So yeah, like I was saying, as you can see here, the price is moving to the downside. So you can just simply draw your support line over here, and then you see a spike just happened now. Okay, I'm not gonna lie and say I was like, planning for that to happen, but this is just an example that if you enter there and it went up, you make money. So sometimes you can be lucky, but if you have a strategy, it makes things easier. Okay, so as I was saying, like how it works is, if you get to a certain zone, like for an example, if you can, let me just go back a bit for like an obvious spot. Okay, like even, okay, that seems like a good zone over here. Okay, so what you can do is, to make things simpler for you as a new trader, I'd advise you to go in with a low lot. Okay, low lot size, meaning how much you're going to risk and so forth. Okay, so yeah, I've just got the zone out drawn out, as you can see here. So if you've been in the market and you see this happening, and you see it forms another resistance here, and let's say you catch it late and this already happened, okay, you can tell that, okay, you know what, the market isn't going past this red line over here. So if I can put a stop loss, let's say here, just below this line over here, and if I can just enter, if it comes back to this point, I can enter, and then you can see what happened. And then as you can see, the market plays around, but it comes to this point, it retests a bit. If you enter there and your stop loss was here, it's a nice risk to reward ratio. You can either take it two ways. You can catch the whole move, or you can just catch one spike and be satisfied and call it a day. That's usually what I do. Like I don't like staying in the markets for too long. But obviously we different type of people, and whatever would suit you, I'd advise you to stick with that. I don't want to tell you how you should do your stuff, but it's very simple. It's a nice strategy. As you can see, once I said, like I said, it's a nice risk to reward ratio trade. So you can analyze and enter a trade like this. Usually if I would hold, I would obviously close my trade around about, let's see, okay, I don't know why it doesn't want to go down, but usually I'd close my trade around somewhere here, guys, around somewhere here. Let me show you, see where this red line is. Usually I'd close it there, because it depends also. If you use the right lot size, you don't have to hold that long. Okay, but obviously if you're going in with a small lot, then you don't have that much of money and you want your account to grow, you can hold longer. That's the nice thing. So that's simply how you trade it. It's very simple. That's how all the boom instruments works. Obviously this is boom 500. It's more simpler when you move to the lower boom instruments, because like I said, you get 6 of them. So 3 move upwards and 3 move downwards. Okay, so I'd advise new traders to start off with the boom 300 and boom 500, simply because, like I said, it spikes quicker, it spikes more frequently. So the reason why it's called boom 1000 is because within 1000 of these red lines, of these red bars, you should expect a spike within 1000 of them. So obviously if you move to boom 300, then it means within every 300 of these red bars, you should expect a spike. So obviously a spike happens much sooner, like I said. Okay, and then the same applies with boom 500 as well. Within 500 of these red bars, you should expect a spike. So the key word is within, guys. Okay, within. So it doesn't mean 5 after every 500 a spike will happen. It can happen within 2 or 3, but it doesn't exceed 500. That's what it means. Okay, so let's move on to the crash 300 instruments. The same terminology applies. It's just that we move in the opposite direction. Okay, there's a nice setup that just happened on crash 1000. Okay, so as you can see, what happened here is price just got to this zone over here. As you can see, it spiked the first time and then it came right back to the same spot, and then it spiked the second time. You see, so that's a beautiful trade there. So maybe something like this would have worked. Obviously your stop loss won't be that far. So this is the nice thing about trading boom and crash, guys, is that you don't have to hold that long. Your stop loss doesn't have to be that far, and you can still make your target. You see, you can like still have a reasonable entry on your trade. Because some advice I can give you from what I've noticed over the years is that you shouldn't hold your losses too long. That's something you hear a lot, but that's something that we also do a lot, especially people that has been trading. Obviously, if you're a new trader, take that advice and know that, just have a certain amount that you're comfortable losing, and if it exceeds that amount, just simply close the trade and walk away. Okay, so talking about the setup here, the price just came to the zone here and then it went back down. So this is a very nice entry, and this is a simple entry. The market repeats itself, so even if you notice something similar like that over here, you could have entered the same trade. Obviously it would have almost hit your stop if you give it some room, but it does spike. So that's the nice thing, like I said, about booming crashes, and it gives you a very nice risk to reward ratio. So same thing I would advise to newcomer traders. Start off with your crash 300 and crash 500, because they crash more often than 1000. Crash 1000 with spikes within every 1000 ticks. So obviously, you might wait a bit longer and lose more money before you actually catch a spike. So trade crash 500 and crash 300. That's where things will be easier for you. So just to show you how frequently these trades actually happen, I'm just going to throw out, as you can see, here's one trade you could have taken. Let me just zoom it in for you. If you can look at this over here, a small one happened right here. Okay, it's just that it happened right there, and then another one happened right on this red line. Okay, so even if you entered your trade, let's say over here, just a bit earlier, you would have still made money. Okay, so nice to reward risk ratio. Like I said, I can take the same risk to reward ratio and I can apply it here as well. Okay, let's say you entered your trade over here. As you can see, this is a nice spot because it spiked like let's just see, try and zoom it in a bit. Yeah, it spiked like 1 2, like right here on top where the sensor is on this red line. It spiked 1 2 3 4 5 times. So you can use this risk to reward ratio anyway, and it should apply here as well. There's 3 of them that happened, so you could have entered that trade. So it's really that simple, guys. I can apply it here as well. So it happens where price would indicate, so you just have to wait for that indication candle that it gives you, and then if it's a right setup, you can enter the trade, hold it, and then make money. You see, so yeah, this is as you can see, the risk to reward I can apply almost anywhere, and it works. You just have to wait for those setups. So I think, yeah, this is actually a great way of explaining it to newcomers, because you can just watch this video over and over and obviously just apply it to on your demo account if you're just starting off, and then you can see how simple it is. You just need to apply patience, obviously, and the strategy that you should follow consistently. You see, so this is the crash 300. I'm gonna just show you the same thing happening here. You don't have to risk too much on your trades, and you can still walk away with good risk to rewards. Okay, if you can look at this trade over here, beautiful trade. Or this is crash 300. I love trading crash 300. This is one of the most active instruments, and it also spikes and it pays a lot also. So obviously, we're in this to get paid. So I love trading crash 300. As you can see, this was a beautiful setup. This happened yesterday, which was the 23rd. No, actually it happened on Saturday. Okay, this happened on Saturday, which was the 23rd of April 2022, if you're watching this video early. Okay, so beautiful setup here, and I can take the same risk to reward ratio and apply it on almost different scenarios throughout the day. Okay, just look at this over here. obviously you wait for this red indicate, you wait for the small indication candles to happen first. Okay, that's also, like I said, something you can use. These indications are these small ones that happen before the drop happens, you see. So you got one here which delayed, and then one happened here, and then the drop happened, you see. So so I would advise new traders, like I said, to start off with these lower crash instruments, because you'll reach target simpler. I'm still using the same risk to reward, and I'm just showing you how you could have applied it in different scenarios throughout your day. So you don't have to take all the trades that happen, guys. You just need to wait for the setup to happen, and then you execute your trade, and then you take profits. Okay, so yeah, no, it's looking simple right now. If you have been trading boom and crash or so forth, you'd understand more or less the power behind what I'm doing now, you see. So this is very powerful information. I'm moving these lines around, but I'm just showing you the types of risk to reward ratio trades you can take throughout your day, you see. So very, very informative stuff. And I'd advise new traders just to use pure price action. Don't start off with any indicators or so forth, because it's always better to learn how the market moves first, and then hopefully after that you can always apply an indicator that can help you see things that you don't really see sometimes that nicely with your naked eye, for an example, you see. But very powerful and informative video. Like I said, if you've made it to the end, and if you apply what I've said today, and you just constantly implement it in your trading, guys, then I really believe that it can help you become profitable. Okay, so thanks for watching this video. Please like and subscribe, and also join our WhatsApp group for free boom and crash signals. Okay, so you can inbox me on Instagram. My handle is heavycamp binary, and then we can just share information, and I can also help you achieve financial freedom. Okay, and we can basically do this together, and you don't need to work a 9 to 5, and you can make money at home, basically, at your own pace. So yeah, thanks for watching this video, guys, and stay blessed.